Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live analysis session. Today, we have, of course, the first major event of March 2025. We have the non-farm payroll figures for beginner traders, those who have never traded before, probably hearing for the very first time the word NFP or non-farm payroll. Very simply, ladies and gentlemen, it is the US's employment data. Something extremely important. It's one of the four pillars of the economy, creates a lot of volatility, a lot of trends on, to be honest, across the whole of the market, but mainly in assets which are associated with the US dollar and the US. So we're looking at major currency pairs, of course, looking at gold, one of the most traded assets, not only on our platform, but generally speaking in the financial trading markets. And then, of course, we're looking at the NASDAQ, individual stocks, indices. We're going to be looking at all of these. So today we're going to, of course, be looking at what type of price movements potentially we may see. We're going to be looking at potential setups. We're going to be looking at strategies, trading plans, and of course, analyzing the announcement itself and what it means and what kind of domino effect it will have throughout the economy as a whole. So this is what we're going to be looking at, ladies and gentlemen. I can already see a lot of people asking questions. I always am available to individuals who wish to ask questions. Of course, they can ask questions throughout today's session. So we're going to start off, ladies and gentlemen, with gold. We're going to actually start off on a 2-hour time frame. So you can see here on the top left, we have gold, 2-hour time frame. The price of gold over the past 72 hours really has been trading in range-bound conditions. So basically, it's not necessarily a price range where it's just a sideways trend with hardly any volatility. It's, yes, a sideways trend, but there is volatility, and this is what is known as range-bound conditions. Now, we've been looking at this as part of our analysis, as our videos, as part of our webinars, also as part of the articles. If you go onto the HFM's website and click on the news and analysis, we have articles every single day. We've been talking a lot about this over the past 3 days and looking at gold. Why? Because when we're looking at range-bound conditions, and it's understandable that we're looking at range-bound conditions because we're looking at a very high price, and when an asset is priced so expensively, then what? And we're about to get a major data such as the US unemployment rate. We had the ECB's rate decision yesterday. Tonight we have the chairman of the Federal Reserve speaking. We've got the US president speaking as well. We've got a lot of data which is definitely going to drive the market. So when an asset is so high, so expensive, then what actually happens is traders, investors, institutions, they want that assurance. They want to see the announcement. They want to see what it means for gold and the market as a whole, and then determine how they wish to trade, because they want certainty over what is the fair intrinsic value of the assets. So to be honest, over the past 3 days, it is understandable that the price is moving sideways and range bound. We've been speaking about this over the past 3 days, particularly looking at and but mentioning to everybody when we're in range-bound conditions, institutional traders, professional traders, they give a lot of importance to the average price because we're range-bound. And when we're range-bound, resistance levels are very strong, support levels are very strong. And I've got actually here this red line. This is the average price at the moment. The average price over yesterday was slightly different, and the day before was slightly different again. But what you notice is when we're looking at the average price, it continuously again and again hits that average price. So, when we're seeing upward volatility and we're moving all the way up here, again, it hits that average price. When we're seeing downward volatility, and this is a very, very strong impulse wave, we're looking at an impulse wave that lasted about 4 hours without retracing, which is absolutely amazing. But again, it hits that red line thereafter because it's the average price and we're range bound. So keep that in mind. Now, depending on what's going to be announced today, We could remain in range-bound conditions. If we are going to remain in range-bound conditions, then of course the average price will continue to be extremely important for traders. And of course, we'll look at that as the announcement is released. If we're not, though, then of course this average price is not important. It becomes irrelevant if we're not going to keep to range bound trade. If we're going to start to see trend in markets, then our approach, of course, will change. Now, in regards to what the NFP means for gold, today we've got three announcements. If we're going to ignore the fact that we're going to have a speech from the Federal Reserve tonight, we'll have a speech from the US President, Mr. Donald Trump, as well. If we're going to ignore those two speeches, the three releases which are related to the employment sector is the average hourly earnings. So confirmed if and by how much salaries are continuing to increase by. They're expected to increase by 0.3%. To be honest, that is the average over the past 3 months. Sorry, the average over the past 12 months. So to be honest, if it comes in at 0.3, it's not going to create volatility because it's not much of a difference to what we have seen over the past 12 months. The unemployment rate, though, is going to be very important. And the most important thing will be the non-farm employment change. The non-farm employment change, ladies and gentlemen, very simply confirms how many more employed individuals is there in the United States of America. Of course, the higher the figure, the better it is for the US. Why? Because the more employed individuals means less people claiming unemployment benefits, more individuals are paying national insurance, they're paying income tax, the risk appetite of the market increases, consumer demand increases massively as well. So there's a lot of reasons why it's important and positive for the US. But when something is positive for the US, positive for the economy, because gold is a safe haven asset, it can have a negative effect on gold. So, ladies and gentlemen, if we're going to get the unemployment rate to remain at 4%, if the non-farm payroll figure is expected to come in at 159,000, slightly higher than the previous month, but generally speaking, it's quite low compared to what we have been seeing. Then, of course, if it's going to come in higher than that, then that's something extremely positive for the US dollar, but something which is negative for gold. In which case, again, like we have been doing over the past 3 days, some traders may potentially aim for that average price at first, and depending on how much higher it is, if it's extremely higher, which is, if we're going to follow traditional economics, massively negative for gold, then after achieving that target, they may take into consideration other price movements. So, for example, aiming for the support level, which can be seen here. So that's something, of course, we're going to look at once the announcement is made. But, ladies and gentlemen, if the unemployment rate rises again, for example, if it rises to 4.1, 4.2%, if the non-farm payroll figure comes in low again, because it came in very low last month as well, let's say, for example, it comes in at 140,000 or less, then, of course, that's negative for the US dollar, negative for the US, and people will run potentially to the safe haven asset, which is, of course, the number one safe haven asset in the world is gold, in which case we're looking at the resistant levels being broken. The main breakout level, ladies and gentlemen, is this breakout level here that we can see. So if we're going to break above that level, that's something which would be deemed as an indication to speculate upward price movement. Alternatively, if we don't want to look at this breakout, we can look at the average resistance level. Now, the average resistance level, to be honest, ladies and gentlemen, is slightly higher than this breakout. Not much of a difference. The average resistance level is approximately here. So again, the breakout and the average resistance level is very similar. So the trigger points for where we're going to start to see, based on technical analysis, indications that gold is going to increase in value is at a very similar price. Now, I've got a few questions here. I'll quickly ask. Somebody here says, sell the US dollar. Some people here say sell gold. Very interesting to see very different takes in the market. Somebody here says to sell at 2,930. So somebody's looking for the price to rebound off the resistant level. Guys, you need to be very cautious because yes, we're looking at technical analysis, but it's all based on what is going to be released by the non-farm payroll figure. The non-farm payroll figure can make resistance levels and technical analysis irrelevant. So it all depends on what is about to be released, but we'll look at that as it's released. Somebody here says, I want to buy gold, but is not sure how to do it. He says here he's scared about the timing. So this is a really good question, because if you've got individuals who want to buy gold, but, and of course, CFDs, ladies and gentlemen, we have to remember, we're not buying physical gold, we're buying CFD contracts, which are speculating gold. The short-term price movement is extremely important. So if you want to buy and speculate gold, for example, ladies and gentlemen, let's go to actually a 15-minute time frame. So we're slightly zoomed, or we could even go to a 10-minute time frame just to make it slightly easier for everybody to view. There we go. Got a 10-minute time frame. Let's say we are going to look at this as a breakout level. If we want to look at that as a breakout level, what individuals can do, instead of opening one very large trade there, they can look to scale in and scale out if individuals are slightly cautious about the timing. So for example, they can open a trade here, then they can open 0.10% higher than that. So open a second buy there, 0.10% higher than that, they can open a third buy, 0.10% after that, they can open a fourth buy, and so on and so forth. So what you're doing is you're mitigating the risk across, should we say, spreading the risk across different entry levels. And you can do the same with the exit levels as well. So if we've got individuals like the gentleman who's asking this question, who want to speculate the buys, but don't know what price, they're scared about the timing, then they can look at what is known as scaling in. Doesn't mean you have to trade more. You can open a lower trade size. That's absolutely fine. But it does mean that by scaling in, you are basically being allowed to spread the risk across different trades and different times. Now, I've got somebody who says, okay, so somebody says you really like the idea of scaling in, but what happens if the price moves against you? If, let's say, for example, you get the price doing something like this, maybe two of the trades were triggered, but it doesn't keep volatility, it doesn't keep momentum, starts to decline like so, then what we also can take into consideration is, and it's important to do so, an alternative price as well. So this here, ladies and gentlemen, is a 200 bar simple moving average. Very, very important on a 5-minute time frame. Very important on a 2-minute time frame, a 3-minute time frame. Now we're on a 10-minute. Let's go to 5-minute. When we're looking at the 200 bar simple moving average, let's say we're going to get a price movement like that. Some traders will look at that and say, potentially that's where I'm going to enter my stop loss. So I'm not going to exceed and make significant losses. And then what they'll do is, under that, they'll open alternative trades. So again, for example, opening a trade here, then opening a second trade here to sell. So we've always got an alternative. So even if we are going to do, enter these two trades here, but it loses momentum and then just does this, it's not an issue. You've closed those trades. They can no longer harm you, and you've got the alternatives, and you're profiting from those alternative trades. So that's something, of course, you can take into consideration as well, ladies and gentlemen. Now, I've got some other people here saying, what's the best performing currency? Well, it depends, ladies and gentlemen. Best performing currency of the year so far, 2025, is the Japanese yen by far. It's followed by the euro only because of the price movement we've seen this week on the euro. Those are the two best performing currencies. If we're looking at the day, the best performing currencies of the day is the euro and the Swiss franc. The worst performing of the day is Australian and New Zealand dollar. The US dollar, which is important for gold, but also very important for major currency pairs, is declining today. It's not the worst performing, but it is declining today. Somebody is asking another question. Somebody's saying, how many lots can he open based on 60 US dollars? Ladies and gentlemen, depends on your leverage. If you need assistance with this, our support team is available 24 hours a day. So, of course, you can speak with them about it, and I'll be more than happy to assist you with that. So, ladies and gentlemen, let's start looking at different setups. So, the non-farm payroll figure will be released in approximately 1 hour. So we have to, of course, look at different setups. Somebody says here, can you please explain the previous values of the NFP and others? So the value of the NFP, ladies and gentlemen, is all related to what kind of domino effects it has on the economy. Because if employment is strong and employment is resilient, then what actually happens is that the chances of an economy is chances of the economy witnessing a recession declines. Yes, the employment data is one of the lagging indicators. It's not, should we say, a progressive indicator, one of the first to react. It's actually one of the last things to react most of the time. But nonetheless, it's one of the key indications of how the economy is going to perform. So, of course, if we get a negative employment data, then it has a positive effect on gold, because gold is a safe haven asset, and a lot of people go to gold in times of uncertainty, including recessions. So that's something to take into consideration in regards to gold. In regards to the US dollar, it has the exact opposite effect. Now, ladies and gentlemen, let's go to the US dollar against the Japanese yen. Why? Because the Japanese yen is actually one of the best performing currencies of the day. Best performing currencies of the year, the Japanese yen. We actually got here the Fibonacci levels because we looked at a signal last time, and we looked at the Japanese yen decreasing below the 60 level, which we can see here, and that's an indication the price will decrease. And it did decrease both in the short term, it decreased to here, and in terms of the longer term, it decreased all the way down to here. So it's nice to see a signal we looked at in the last session. But if we're looking at the US dollar against Japanese yen 2-hour time frame, we've got a few indications to take into consideration. We've got the red line here, which is a trend line. We've got the blue line, which is a sentiment line. Both are used differently, but either way, we are trading below the two moving averages, the 75 bar exponential moving average and the 100 bar simple moving average. We're also trading below the 50 level of the RSI. So here we got indications that sellers are controlling the market. But what I will say, ladies and gentlemen, is we actually have divergence. So if you look at this low and the next lows, we can actually see an upward tilt with the lows, the price swing lows. Whereas if we look here, we're actually seeing lower lows. So there's a contradiction there. Now, sometimes that indicates, ladies and gentlemen, that the price and the trend is losing momentum and can retrace back upwards. Now, if it is going to retrace back upwards, a lot of the time traders will aim for this 75 bar exponential moving average. So again, for example, here we had downward price movement, it retraced, people aimed for that level. And this is something traders continue to do. So if we are going to see a retracement, that is a level we can aim potentially for. So if we are going to see that, ladies and gentlemen, let's go to a 3-minute time frame, and we'll look at the US dollar against Japanese yen, we can definitely see we're looking at upward momentum. We're definitely trading above the 200 bar moving average. Now, when we break out of the 200 bar moving average like we've done now, a lot of the time it will retrace back to it. We don't know if it will at the moment, but a lot of the time it does before continuing the upward price movement. So keep that in mind because that's something we tend to see in the market. I can give you an example. Look at this. It broke below for the first time in a very long time. What happened? It retraced back. If we look at another example, here it broke above the 200 bar simple moving average for the first time. It retraced back to it, broke below, retraced back to it, and so on and so forth. So keep in mind, it is something that we need to, be slightly cautious about. But either way, if we're going to break above this level, then we have indications that the price is going to increase in value. This is if a retracement is not going to form. If a retracement forms, which isn't a bad thing, ladies and gentlemen, we're going to get a retracement in declines like this, then again we can look at our Fibonacci levels. Here I've got a 60 level, but because there's quite a lot of volatility today, because of course the non-farm payroll figure, some individuals may not want to look at a 60% retracement level being regained. Some people may want to see 65%, so slightly higher. So if we are going to decline and see a retracement like that, as soon as it regains 60%, 65% again, which is basically at this red line, as soon as it retraces there and then it goes back up like this, as soon as it crosses that level, bear with me. As soon as it crosses that level, bear with me, like this, then of course we've got a signal that the US dollar against Japanese yen is going to increase in value. But ladies and gentlemen, if it's not going to do something like that and the price does something like this, and it's going to decline back below the 200 bar simple moving average, then again, we're going to look at an alternative scenario and look at the potential of the price declining and continuing the trend that we have been seeing, to be honest, so far in 2025, generally speaking. Also, if we go, let's say, if we go to 30-minute time frame, we can again look at 65% retracement here as well, in terms of a more day and swing approach. 65% momentum is basically here. So if we're going to drop below that level, definitely below a major support level, is 65% of the retracement and impulse wave being regained, we can look at the potential scenario of the price decreasing in value. Now let's look at the NASDAQ. We've got quite a lot of people here, and I'm not ignoring you. A lot of people here are saying the NASDAQ. If we look at the NASDAQ, I've got some other people here. Euro USD, we'll look at the Euro USD as well. Let's start with the NASDAQ because a lot of people are saying the NASDAQ, and then we'll go back to the Euro USD. What I will say until I get the chart up here, Euro USD, best performing, the Euro is the best performing currency of the day. Now, here we've got the NASDAQ. Now, there's different things that we can look at with the NASDAQ to also help us to understand what kind of price movement we may see. Now, because stocks are massively correlated with the investment sentiment of the market, sentiment towards stocks, and also the risk appetite of the market, then it's very important that we look at risk indicators. Now, some people, they're fully aware of how to use technical analysis, but risk indicators are very important as well. For those of you who don't know what risk indicators they can use, the VIX index is massively used as a risk indicator. For the NASDAQ, people also use the high-low index as well, which can be a very powerful tool. Those are two tools that you can use to help you to determine what kind of price movement potentially we'll see. Now, with the NASDAQ, the price, of course, is declining. It's been declining for 3 weeks. It's still relatively high if we're looking at the longer term, ladies and gentlemen. But nonetheless, we're trading at the lowest price that we have been trading at since October. So we're looking at an 18-week low. That's quite a that's quite low, ladies and gentlemen, and it's declining. If we're looking at the all-time high, ladies and gentlemen, it's declined by almost, well, at the moment it's almost more than 10%, but if we look at the day's low, it's more than 10%, ladies and gentlemen. It's almost 10.5%. So for the stock market and the NASDAQ, I wouldn't say that's the end of the world, should we say, but it is a substantial decline. If we look at the previous major decline we saw, it was a decline of 17%. So we've still got some way to go until we got indications from price action that the retracement could end. 17%, for example, brings it all the way down to here. There. That's where it brings it down to. So if we're going to see a decline all the way down to here, and that brings us smack bang between the 100 and 75 by exponential moving average, then we've got a very similar retracement to what we saw here, ladies and gentlemen. So if we do decline, to this level here, anywhere between those two lines, traders need to take into consideration, is the price going to increase in value? Because think about, why does the stock market push stock prices lower? Because the lower it gets, the more that investors are enticed to take advantage of the discounted purchase price. Because what the stock market wants to do is they want to lower the price in order to increase demand. So it's a question of how low does it have to go in order to increase demand. It's something that, of course, traders will monitor on a day-by-day basis. So based on the previous retracement, based on these two lines here, it could be, ladies and gentlemen, in between these two levels. But let's go back to a 2-hour time frame, guys. In the 2-hour time frame, we've got a lot of indications, telling us that the price can decline. We're trading below both. The latest crossover, which happened quite a while ago, is a downward facing crossover. We're trading very clearly below the RSI. We've got slight divergence on the RSI. I wouldn't say it's a major divergence. We've got an upward tilt here. But if we're looking at here, we've got a downward tilt. What I'm more interested in is the VIX index. The VIX index, ladies and gentlemen, is more than 1.5% lower today. If it's lower, it indicates that risk appetite is increasing. So, we haven't seen any increase today so far. If I put my day separators here, we haven't seen any increase whatsoever today. Let's zoom in slightly. There we go. Today, no increase whatsoever. But if we look at Asian stocks are performing well. European stocks are not performing well, but to be honest, that's partially because of the hawkish tone of the ECB yesterday. But Asian stocks are performing well today. Let's look at the components of the NASDAQ. Now, if we're looking at the components of the NASDAQ, most of them are declining. The only one which is seen, and it is seen an amazing spike, is Broadcom, ladies and gentlemen. If we look at the top 10 most influential stocks, we've got only 20% increasing in value. Only 20%. The only ones which are increasing in value is Nvidia and Broadcom. The rest are all declining. So we've got indications there that the price, is going to decline. If we look at more stocks, a lot of people look at all stocks which hold 1% and above, in which case it's the top 24 stocks from the 100. Let's get a calculator out. How many of these stocks are increasing in value? So we've got 1, 2, 3, 4, 5, 6. So only 6 from 24. That will give us a nice figure as well of 25%. So from the top 24 stocks, again, only 25% are increasing in value. So we've got clear indications there that the NASDAQ will decline. But like I said, the VIX, ladies and gentlemen, is trading lower. That's a positive indication. And also keep in mind that one of the reasons why the NASDAQ is declining is because of trade wars and because of tariffs. Trump, again, has removed tariffs temporarily. So he's definitely looking to use it as a negotiation tool. And, people may start to lose faith in regards to if indeed he's going to trigger and use tariffs in the longer term, because he's delayed it now for a second occasion on Mexico and on Canada. The only ones he's not delaying it on or withdrawing it is on China. So, ladies and gentlemen, this is something we're going to keep on monitoring. We're going to keep on refreshing, especially after the NFP is released in 45 minutes. We'll look at this. If these suddenly start to all turn green, or 70% of them turn green, then the VIX is indicating the price is going to increase. Individual stocks and components is indicating the price is going to increase. So we'll look at that scenario on the NASDAQ as well. Again, we can go to a 3-minute time frame like so. Okay, we've seen a very strong decline here, but if we're going to increase above the 200 bar simple moving average, which is here at the moment, then we can start to speculate upward price movement. In the short term only, not necessarily long term. So for example, you may potentially, just as an example, aim to earn 0.15%, 0.18%, 0.10, 0.20. This is a 3-minute time frame, so it's for short-term trading. Now let's look at one more asset. Somebody says if we can look at the Euro USD. So let's look at the Euro USD. There we go, Euro USD. Clear indications of upward price movement. We spoke yesterday on a video that the price may be overbought. We did get the spike because of the hawkishness of the ECB, but nonetheless, like we said in the video, it couldn't hold on to those gains. It couldn't keep momentum because we had indications the price was overbought. And because of that, it declined. And you can see it declined here. Again, more than enough price movement for those individuals looking to speculate in the short term. I mean, it declined by almost 0.90%. But we've broken out again. We can see here we've got a breakout, clear upward momentum. We're above both trading trend lines. We're still seeing divergence. This will depend, though, ladies and gentlemen, on today's announcement. But if we're looking at momentum, the momentum is indicating the price will continue to increase. In the negative side, though, ladies and gentlemen, is the divergence, and the price is extremely expensive. So, will people start to profit take, especially now that we've got to the average price that we have been seeing throughout 2024, 2023 as well. So that's something which is negative in terms of the price of the Euro USD. It all depends on today, though, ladies and gentlemen. Here, we're trading above the 200 bar simple moving average. We're getting closer to it, though. If we're going to decline below this level, or even better, potentially we can use 65% momentum. 65% momentum, ladies and gentlemen, is here. So slightly earlier entry, then we can start to speculate downward price movement, at least until our trend line. If it's going to decline below there, then we can potentially continue speculating accordingly. Only for the short term, ladies and gentlemen. Again, it's only a 3-minute time frame. So, ladies and gentlemen, we've been speaking now for more than 30 minutes. We've looked at the NASDAQ. We looked at gold in a lot of detail. We've looked at the Euro USD. We've looked at the US dollar against Japanese yen. Remember, at the moment today, the best performing currency is the euro. So if you want to speculate the US dollar will continue to decline, there's advantages of looking at the euro and the Swiss franc, which is performing well today. Worst performing currencies is the Australian dollar and New Zealand dollar. So if you want to speculate the price of the US dollar will increase, maybe it's more beneficial to potentially look at those two currency pairs. Like I said today, ladies and gentlemen, the unemployment rate is expected to remain at 4%. NFP is expected to be very similar to last month, only a slight improvement, expected to come in at 159%. Average earnings increase is again and continues to remain at 0.3%. So no major influence there. it always going to depend on, though, ladies and gentlemen, if we're going to see the data coming in as expected, higher than expected, or lower than expected. That's what's going to create the volatility, ladies and gentlemen. Now, keep in mind, ladies and gentlemen, that we have a lot of analysis throughout the week. We have a lot of analysis that also is available not on social media, but on our webinars. And continue to look at this on a weekly and daily basis. So you can, of course, register and get access to this for free. Enjoy the rest of your day, ladies and gentlemen. Keep in mind the NFP will be released in 40 minutes. So expect a lot of volatility, expect spikes there accordingly. And keep in mind that that volatility is where we have potential opportunities of where we can trade. The important thing, though, is when we have news and when we have a lot of volatility, always to be looking at an alternative scenario as well. So, ladies and gentlemen, trade safe, trade responsibly. Hopefully you found today's session educational. In the meantime, enjoy the rest of your day. Good luck and have a lovely week.